The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
And David Morgan with the weekly perspective for the week ending 28 November 2025. Well, quite a end to the week this week with silver shooting much higher on the 28th and all kinds of information out there based on what took place. So I'm going to tile this weekly perspective, silver's breakout, the CME breakdown, and the quiet hands behind the curtain. Silver finally did what the mainstream has spent decades insisting it could not do. It broke out to an all-fresh, all-time high, punching decisively through the mid-50s, and ringing alarms across every trading desk in the world. But price alone was not the headline yesterday. What makes this move historic is how it happened, and what it revealed about the fragility of the paper markets that pretend to discover the price of a real asset. We need to walk through this step by step because the public will hear fragments, meme-level analysis, and sensational rumors, but my job is to keep you on the straight, sober view and also to tell you why this event is far more important than a new price. The market breakout was triggered by a market breakdown. Let's start with the facts. CME Group, the world's largest derivatives exchange and the clearinghouse for COMEX silver futures, was forced to a complete trading halt after what they described as a cooling system failure. The shutdown lasted over 11 hours. Think about this. A plumbing failure in a single building disconnected trillions in global markets, equities, currencies, metals, agricultural contacts, all jammed into neutral. No bids, no offers, no price discovery. When trading finally resumed, the silver market exploded upward with the violence that only happens when liquidity is vacuumed out of a system and suddenly restored. The silver price ripped above 55.60 and moved into 56.45, I believe. And this was held at that high all day long until the close of the market. The official story is, as I said, a cooling unit malfunction. That's plausible on the surface, but there's many redundancies in these things, and it doesn't really seem like it's that probable it actually happened. Regardless of that opinion of mine, what we can expect. In 40 years of watching metals markets, I've seen every kind of excuse used to mask a structural failure or unfathomable truth. Sometimes the simplest explanation is accurate. Occam's razor, as most of you know. But you also have to consider the environment. End-of-month positioning, holiday-thin trading, high volatility in rates and currency markets, massive stress building in the physical silver supply chain. Let me say that one again. Massive stress building on the physical supply chain for silver, and soaring global demand. So, when one exchange sets that world silver price, what happens when it goes dark? You don't need a conspiracy theory to raise an eyebrow. All you need is experience. Markets in tight physical supply and massive derivatives exposure are prone to sudden accidents at a very convenient moment. It's simply this. Whether accidental or not, the outage demonstrated how dangerously dependent the world is on centralized, fragile infrastructure. You cannot have a market this critical to industry supply chains and sovereign wealth tied up in a single cooling system in Chicago. This is exactly why I preached for decades that physical metal outside the system is the only true safe way to hold wealth, true wealth. Enter Paul Tudor Jones, the rumor shaking the trade desks. This came from Nobody Special and Bob Coleman, who I trust both. However, I could not verify it, so I will continue with this part of the update. Rumors have hit the market immediately after the reopen that Paul Tudor Jones, one of the most successful macro investors of the last century, has been placing large, long-dated bets on silver. The chatter's about options, futures and options extending out into 2027, with large strike prices above the current bid. Let's be clear, there isn't confirmation on my part. You will not find an SEC filing for futures positions. There's no audited tape that you can scroll through, but consider the pattern. PTJ has a history of stepping into markets exactly when structural fragility becomes evident. He doesn't chase price. He front runs the new change. If he did enter here, it tells you something profound. The smartest players in the world see silver not as a trade, but as a strategic macro hedge for a disorderly monetary future. Whether or not he's the buyer, the behavior fits the profile of institutional sharks circling the market, finally cracking at the edges. This is not noise. This is system stress. The metals community is buzzing with excitement. Headline screams, social media lights up. But most of this misses the main point. The real story isn't that silver hit a new high. The story is the world's largest metal exchange proved it cannot guarantee continuous functioning at the very moment the physical market is tightening and sovereign demand is increasing. The story is that paper price discovery broke, not because of manipulation, but because the system itself buckled under its own weight. The story is that the physical market is pulling the paper market out of sea like a ripped current. The story is that the sophisticated capital may now be positioning for the next leg higher, not because of hype, but because the monetary system itself is so shaky. So what comes next? Silver is entering what I've long called the recognition phase, where the world finally realizes the metal is both industrial, indispensable, and monetarily irreplaceable. Expect volatility, violent swings, liquidity gaps, but also expect a structural repricing that doesn't give you many reasons to enter at a dip. Those who hold physical metal outside the system now have validation of what they believed all along and taken action upon. Counterparty risk is not a theoretical warning. It's real, it's present, and it just shut down the global future market for about half a day. My advice really is not unchanged, but it's a little more urgent. Keep your physical allocation strong. Hold it outside the banking system if at all possible. Maintain discipline. Silver will give you both panic highs and gut check pullbacks. And above all, understand this is not a spike, it's a signal. You're watching the early stages of a historic transition, the slow, grinding collapse of paper promises and the rise of real assets that cannot be printed, erased, or defaulted upon. Silver just set its warning shot. Now, the real game begins. This is David Morgan of themorganreport.com, signing off for the last week of November. I will be back with you next week. Looking at the website here, you can sign up for the free information over here on step 1. If you care not to do that, that is all right. You can go up here to the blog for free. And most of the content I do in the public is posted there for you. So all I have to do is one click of the mouse. If you're interested in subsets of whatever this is, I don't know what it is. Thousands of interviews. Again, crypto conspiracies, one of 30 podcasts. All I have to do is type that in the search engine here. And then, of course, hit the enter bar. And you will get all of those. Another example might be Bob Coleman, for example. So type in Bob Coleman, hit the enter bar. This is a interview that I did with Bob on the Financial Sense News Hour with Jim Plava. So Bob, should click that and listen to it. Also, it was on our mastermind, which is part of our paid service. So trust all the Americans had a happy Thanksgiving. Looking forward to the holiday season at the end of December. And again, I'll be back with you next week.
The U.S. government debt is about to cross $37 trillion. That's not a typo. That's trillion with a T. Tariffs are being used to try and even the playing fields. Global supply chains are shifting. Inflation isn't going away. And the value of your dollar? It's quietly being drained while no one is really talking about this. The truth is, we're living through the early stages of a financial reset, whether anyone wants to admit it or not. And if you're still relying on mainstream headlines or financial advisors who just tell you to write it out, you could be blindsided when things really shift. That's where the Morgan Report comes in. For over 25 years, David Morgan has been helping investors cut through the noise. He tracks what actually drives markets, from precious metals and mining stocks to global debt and monetary policy, and show you how to protect and grow your wealth when the system is under stress. This isn't just about gold and silver. It's about having a clear-eyed view of where things are headed and making sure you're not caught off guard. The Morgan Report gives you real research, honest analysis, and strategies you can act on, even in a world of rising debt, unstable currencies, and economic uncertainty. Go to themorganreport.com today, download your free report, get informed, get ahead, and take back control of your financial future. themorganreport.com. because 37 trillion in debt won't